Today is D-Day, Debt Day, for millions of Americans across the country. Oh my goodness, there's just so many people with so much student loan debt. It has to be addressed. Today is the day, you guys. And I do have some feelings. I'm excited for the TikTok videos because a lot of them are usually funny, but I'm also very much concerned about all these people who do have all of the student loan debt. So that's what we're going to talk about today. Now, if you guys are new to the channel, subscribe to the notification bell so that way you never miss an episode. You guys can support the show by Cash Apping me at #RShellBranch. And you guys, welcome back to another episode of Archie's Briefings. Let's go ahead and let's talk about D-Day, Debt Day for all these Americans with student loan debt. Let's go ahead and let's talk about that, shall we?
There is something that has been on my heart that I did want to discuss. Discipline is a huge part of being productive, being lucrative. I'm not for anything that goes against true productivity, true sovereignty of the individual. The choices that we make are what's going to be up for judgment.
All right, you guys. So as I said in the open, it is D-Day, Debt Day, where all the payments are, resuming. This is the situation that a lot of Americans are in. And again, you don't want to laugh, but it's like watching the horror movie where someone throws the keys at the bad guy and it's, why would you throw the keys? Okay. I don't want you to get got by Ghostface. I don't want you to get by Jeepers Creepers, but you were the dumb one who threw the keys to the car. Like you could have gotten away. It's just, you did it to yourself. You put yourself in this position. Now, again, it doesn't mean that you didn't have help, right? I mean, guidance counselors, parents, friends, everybody's kind of pushing you towards college and taking on all this debt because according to society, you cannot be respected. You cannot have the life you want if you do not take out all of this debt. And, now it's literally payback time, and payback is a B word. And that's exactly what they're dealing with. I said, debt is a monster. It is a beast. It is the Goliath to their David. And, you just got to be willing to make those sacrifices and take on all these extra jobs, try to increase your income, cut wasteful spending. So that way you could actually do something about this debt. But now the day is here. Okay. They've been bracing for impact since the Department of Education secretary had come out and said, this is what's going down. So I'm going to go ahead. I'm going to play a clip for you guys from CNN because I honestly do not believe that this video has to be that long. It's really just we're looking at the videos, hearing what people have to say about what's coming, and just go from there. So let's go ahead and let's run that CNN clip for you guys, shall we? All right, you guys. So this is the clip here. As you can see on the side, defaulted student loan collection. I don't know who this woman is, but pretty much all of this is about what's about to happen to these students who are about to default if they haven't defaulted already. So let's go ahead and let's run this clip for you guys, shall we?
Collecting federal student loans in default after the long pandemic era pause, leaving millions of Americans worried they could have their paychecks or benefits garnished. A new study by TransUnion shows a significant number of Americans with student loan debt are seriously behind on their payments. CNN's Matt Egan is with me now. So, wow, what are you learning from all this? Because having your paycheck garnished is a big thing if you simply can't afford to repay it right now.
Yeah, sir. Look, this is a real problem. And this new research suggests that, yes, a lot of people who are stuck with student debt are struggling just to get by. So TransUnion found that just over 20% of all federal student loan borrowers who have money due are seriously delinquent. That is defined as 90 days or more past due. Now, this translates to about 4 million people. And when we look at the trend, you can see that this is the highest level on record, up from 11% back in February 2020, just before COVID. It takes out the previous record high of 15% back in September. Now, what's notable here is that
before I let them go on, look at these numbers. Okay. February 2020, 11.5%. Now it is 20.5%. That's what the numbers were back in February of this year. Do I think that was an accident? Absolutely not. I do not believe that they were doing the students a favor by telling them that they had this amount of time to not pay anything, to not inform them that they were delinquent, to not inform them they should just resume making these payments sooner rather than later. Doesn't put the student or the person who was the student, now just an adult with all this debt, that they were not informed about what's going on with their debt. They have no idea what their numbers are, you guys. And this is part of the problem, so the institutions do not care about your financial health. They do not care about the whole picture of your financial position. But as consumers, and I've said this in previous videos, even when I was talking about the California fires, as consumers, we're going to have to start asking questions that we didn't think that we were going to have to ask. If you are one of these Americans out here who are under the impression that the system is going to inform you about your position, your financial health, think again, okay? You already know me. I don't trust the government. I don't trust the financial institutions. Now I'm going to let them go on from now.
TransUnion only looked at federal student loan borrowers, not
Okay.
private.
Right.
And they're excluding people who have deferment plans or who are already in forbearance. So this is really people who owe money and are not paying. Now, why is that? Suggests that some people may not be able to pay, right? Some people may be deciding not to pay, and others might not.
Okay. Some are deciding not to pay. I mean, come on, you guys. We saw that video I showed you guys the last video I showed you where I showed you guys that young lady who was talking about how we're stupid because we think she should pay back her student loans. And she's shocked that the government is asking for high numbers because, well, you had 5 years, 5 years to be making payments and you decided not to do that. But you have student loan debt up to over $100,000 and you only want to make $120 a month. You'll be dead before it's paid off. That debt's probably going to transfer right over to your children if you have any. Like, why is that fair to your kids? Why is that fair to the so-called legacy that as Black people, as Black women, that we want to leave behind? It just doesn't make any sense. You're going to have higher numbers because they want you out as soon as possible. As soon as possible. You pay as much to get out of this debt.
Not realize that they owe money again, because remember, there was this pause back in March of 2020 during COVID-19 where federal student loan payments plus collections and interest were all suspended because of the health crisis.
Right.
There were a number of extensions. And then in late 2023, payments started to become due again, but they were given this 12-month on-ramp, this grace period to start to make those payments again. And starting today, the Department of Education is resuming collections. And look, this is a real issue for some people. I talked to a 29-year-old in Southern California, and he told me that he's got about $12,000 in student debt. He doesn't owe anything right now because he's on one of these income plans, but he's got 2 different jobs just to try to get by.
Right.
And he's got credit card debt. And he said, look, I voluntarily took on student debt, but it adds up way more than you expect. He said, it feels like I'm drowning.
Okay.
Well, I know.
That's pretty much it. Now, before I say my piece, they go on to talk about how this is going to affect people's credit score, and that's going to make it a lot harder for them to take out additional debt, specifically the justifiable debt like the mortgage, because their credit score is going to take a major hit. And it's like, well, obviously it's going to be the case. Now, to what he just said about that 29-year-old in California, he's my age, okay? He's got $12,000 of student loan debt. $12,000? That's it? That's it? I've heard numbers, people, like $250,000. I've heard numbers like over $600,000. Okay. Now, I'm not saying that to even have $12,000 isn't, a bad thing. Of course, if you are in the negatives of your net worth, that's obviously problematic. However, dude, you got 2 jobs, $12,000 worth of student loan debt. Why aren't you out of this debt? Because you have additional debt. Now, here's the question. That's credit card debt. When you took out those credit cards, did you already have the student loans? Did the credit card companies, when you asked for these cards, did they care about your financial future? The answer is probably no. Not even probably. They definitely did not care that you already owned debt. Why? They're not even asking. How much debt do you already have before we say you can have these credit cards? This is a problem. I'm going to come out of this video, you guys. All right, guys. So you saw that clip. I'm like, yo. There is no way that when you see what happened with the student loans, I think it was the pause. For me, it's the pause. I do not think that when they made that decision that they were helping the student, that they were helping the American by telling them that they could go for 5 years and then an additional 12 months, an additional year on top of the 5 years to wait to pay back their student loans. I don't believe that was actually helpful. Okay, what would have been helpful to these Americans was to tell them, get out of this as soon as you possibly can. And it's like I said, people go into this and they don't know what their whole numbers are. That young man, not only did he have student loan debt of $12,000, which, I am kind of impressed at, considering I've heard much higher numbers. I've heard from 50,000 to a lot higher. And even when someone says 50,000, I think to myself, well, hey, I feel like you can be out of this within maybe 5 years, where the person who's got over $250,000, that one is just unbelievably high to me. But when I hear numbers like low 5 figures, like $12,000, I'm kind of impressed. I'm kind of impressed. I do not believe that that pause was actually helping Americans. Telling people that they could wait to go however long to not pay back their debts is not a good idea, because now, yeah, your credit score may say you have a good history. But then when the bill comes due, which is what's happened, now look, and they're mad at MAGA. They are mad at America First because we're saying you were always supposed to pay this back. Borrowing, it implies that you're going to pay this money back. And the institutions simply do not care that you had all of this debt before they allowed you to take out more. Okay. As long as debt is accessible to us, easily accessible to us, this is going to be a problem. Now, you guys, I thought about this for a couple of weeks. I wrote op-eds on the issue, and I just really wanted to take a deep dive into what kind of policies should go into place. So moving forward, okay, we can actually do something about protecting Americans from debt, period, and from, I believe, a very predatory financial system. So let's go ahead and let's just review just the idea of my policy. I call it the Responsible Access to Credit Act, okay, or RACA, you can call it that. I'm going to pull that up for you guys, and we can just go over that policy, and I'll give you how I got here and what I think it would do for the American people. So let's go ahead and let's just pull that bill up, if you will, right? Let's go ahead and let's do that for you guys, shall we? Okay, guys, so this is my bill here, okay? The Responsible Access to Credit Act. You can see here the objective: to curb unsustainable household debt growth, reduce average interest rates, and promote long-term financial health without restricting access to necessary credit. The core components here is a tiered financial review requirement. You can see what the numbers are here. I'm going to link this, you guys, a PDF file. I will link this in the description box because I do want everybody to kind of have their say. Look at this. What do you think about this? Do you think this is a good idea? And you guys, all in all, without going through the whole thing, I just wanted to make it clear, from a tiered system, paying attention to the debt to income ratio, the DTI, incentives for larger down payments, income-based interest rate guidelines, benefits to the economy because of this kind of a policy, right? More stable consumer spending, lower household debt means consumers can maintain spending without relying so heavily on credit. Reduce defaults, which would be incredible right now for people with student loan going into default. Higher down payments and income-based lending reduce risk of missed payments and bankruptcies. Lower interest burdens. More money stays in consumers' pockets, boosting local economies. Healthier lending market. Lenders benefit from fewer delinquencies and write-offs, enabling more competitive rates. The idea for the policy, you guys, is that not only does it bring down the interest rates for all consumers, but it means consumers would not rely so heavily on debt and credit to begin with. Because I said in previous episodes, you guys, the most accessible product that anybody can get their hands on if you're 18 and over is debt. Okay. And from 16 to your death, right? Okay. From 16 to 6 feet under, people can take on all of this debt. How a 16-year-old gets access to it is, bad parenting, in my opinion. But this is kind of the whole point, you guys. When I say the DTI, you guys, I am talking about the debt to income ratio, which is a number the marketplace doesn't really think about. They think about your loan to income. Okay. So how much you're borrowing in ratio to your income. They don't care about how much debt you already have. They look at your credit score. Okay. Your credit score, which is your past history with debt. Okay. And loan to income, your LTI, which is the amount of money you're asking to borrow in ratio to your income. Nowhere in these numbers, okay, nowhere in there does it say how much do you actually owe. And for that 29-year-old who said he got credit card debt on top of the $12,000 student loan debt, do you understand that had you actually done this gentleman's math, that you might have said to yourself, young man, you may not be able to take out this amount of credit cards. We are recommending that you don't. By law, wouldn't it be nice if the lenders had to inform the consumer about what their debt ratio was? Like, how much debt do you actually owe? Maybe the lenders should actually give people the full financial review before they just give this money out. Because if you're sitting on student loan debt, how is it possible that you can go out there and take out a mortgage? Doesn't make sense to me. That you can go take out a mortgage when you're sitting on almost $100,000 worth of student loan debt. Doesn't make sense to me that you can take out all of these credit cards or auto loans and payday loans when you're sitting on all of this credit card debt. Think about when you go to a bar, right? If you're doing too much, by law, the bartender has to cut you off. No, you're doing too much. Now, first they'll say, I recommend you don't do this extra shot. You have the choice if you're going to take on the extra shot as the patron. You can decide as the customer if you're going to take on an extra shot. If you take on an extra shot and you're doing too much, by law, the bartender at that point has to cut you off. You've done too much. Not only am I cutting you off, I'm taking away your privilege to just walk out of here and drive. Why? Because you are a danger to yourself and others. I'm like, if bartenders have to do this, because they'll suffer consequences and the establishment will suffer consequences along with said consumer, why aren't we doing this with the financial sector? Why is it that the lenders can continue to issue out more and more debt to a citizen who might be riddled with debt before you actually give them all the information? If you do their numbers and you see that their DTI, their debt to income ratio, is too high, you have to say by law, which is the idea of this bill, yeah, I'm recommending that you don't take out this number, or you put down more capital to bring down the interest rates, which decreases the risk on the lender, or you just don't do it right now and you wait. You fix your numbers, you bring down your debt, you increase your income, you fix your credit score, you do what you got to do. You have a full understanding of what's going on here, okay? Like the bartender, okay? The lender has to inform the patron, you're cut off. I can't just let you do this. I can't just let you continue to do this to yourself because you are a danger. And by allowing consumers who are high risk to continue to take out debt only increases interest rates for everybody, making this consumer a problem for all other consumers. You see how this works? The same principle, okay? Same principle. Because you have all the information about your situation and what could be your life if you take on this debt, you might have made a different decision, because we know knowledge is power, you guys. Knowledge is power. And the Lord says, my people perish from a lack of knowledge. We are just taking on all of this debt. We want to go out there and get the degrees because society says we should. And this is the circumstances. And now it's debt day. And now it's debt day. And from that young man, again, I'm impressed. $12,000 of student loan debt to people who are suffering from over $250,000 in debt. I've seen numbers as high as $1 million. That is ridiculous to me. That, again, if the DTI, the debt to income ratio, mattered to the marketplace as much as I believe it should matter to the consumer, would these Americans be in the situation that they are in? Now, shoulda, coulda, woulda, don't make nobody feel better. If anything, I think it makes people feel worse. Sorry to see a lot of Americans are going to be going through this. You guys get in the comment sections, let me know what you think about all of this, from this being D-Day to my policy idea. How important do you think the DTI, the debt to income ratio, is to the consumer? Because it certainly doesn't matter to the marketplace. Not as much as it should, in my opinion. So go ahead and get in the comment sections. I love you guys. We shall see how this plays out moving forward. Interested to see how this is going to look. Very, very interested. You guys let me know what you think about this. Subscribe to the channel if you haven't already. Hit the notification bell so that way you never miss an episode. You guys can support the channel by cash apping me at #RShellBranch. And you guys, both excited and concerned. So we shall see how this goes. Love you guys. Talk to you later. God bless and Kepla.